How is everything? How is everything on your side? Fantastic. So, right, VIX has reached that level of support. VIX has reached that level of support that we're talking about. So basically we spoke, if you remember, we spoke about this, whereby price pushed down. After that push to the downside, price came inside a range. This is a range. Why? Because a range is whereby price will be maintaining the same highs and the same lows, same lows, same highs, same lows, same highs, up until it breaks that range. So most probably whenever we see a range after a bearish move, we also expect the range to most probably break with a bearish move again to the downside. So here the expectation will be a break to the downside, bearish, but is it going to break now? We are not sure about that. So right now, currently, we are seeing that price is respecting this level of support, and price can actually go back up. Once it goes back up here, it can come in and even give us a third touch, first touch, second touch, third touch. So that third touch now is the one that can come maybe and most probably break this range, because a third touch will be having much more momentum than the first one and the second one. So that is something that can also happen. That is something that can also happen. But basically, we are still within this range. So all the sales, they ended yesterday. All the sales, they ended yesterday. And if you check, it didn't sell that much yesterday. It didn't sell that much. This was day before yesterday. Then this was yesterday. So day before yesterday, it closed somewhere here, right? So if you check the difference now, it didn't cover much yesterday. Yesterday it didn't cover much because it actually bought before it. So you should see yesterday didn't cover much. Didn't really cover much yesterday. So yesterday it didn't even sell that much. Yesterday it didn't even sell that much. So this is the only two levels, that major levels that you need right now, because once we break this one, that's where you know that I'm taking major sales to continue with this trend. So having that, what you now need to do is to scale down to a lower time frame and identify buying opportunities, because we're currently at the level of what? Of support. So if you check already, personally, I'm already in this buy. I took it straight exactly down there. So what you now need to do now is to identify entry points now based on these smaller time frames. So another thing that you can also do on a 4-hour perspective is to draw other levels of support and resistance that price might bounce on. So how much is your balance that side? How much is your balance? Nigel, how much is your balance?
62.
What happened?
It out.
Eh?
I was then out yesterday.
Okay. So this is what we have on the 4-hour perspective. We have also this Fibonacci, whereby price can even come and respect this Fibonacci if it doesn't go all the way to the 100%. So we're done there. Just need to scale down lower so that we identify a better entry points for those that didn't enter from the bottom. So now, if you remember this downward channel that we had, already, let me draw it like this. already you can see that it's broken already. It's broken already, the downward channel. This was the downward channel. This was the downward channel there. Already it's broken. Already it's broken. Touch there. Already it's broken. So now we are looking forward for what? For buying opportunities. We are looking forward for buying opportunities. Looking forward for buying opportunities. So downward channel broken. What exactly the thing that we actually were looking for in order for us to take what? To take buys. So after that has happened now, what one needs now is a retracement either to the trend line or to any broken level of what? Of support, right? That area here, let me, okay. So already we have this area here where price broke above, respected, then break out like that. So that area can also, if price retraces there, it can also signify entry points, but you need to wait for the rejection there, because what it can do, it can come and actually maybe shoot down here, shoot down before going up again in the respect moment. So you simply need to wait for the rejection there, just in case price decides to come back all the way to the downside here. So that one is a key area as well. Broken already. So now, once that happens, once we get the retracement, whether there or somewhere at the bottom there, once we get that retracement, we enter our what? Our buys. And somehow I feel like this mid zone here, can be respected. I feel like this mid zone can be respected. That mid zone, I feel like it's going to be respected. So here, two possible scenarios are most likely to happen. Either price is going to retrace there where we marked, or it's actually going to maybe come back down, double bottom. You see? So this is also another possible scenario that can happen where the price comes back all the way down, fails to break that level, makes a double bottom, then all the way like that. Something like this, where the price goes after breaking a certain major level, after breaking it, it goes all the way down, makes a double bottom, then boom, then go. So VIX, you simply need to be patient with it and wait for those rejections. Those rejections are your entry triggers. Once you get the rejection and the bullish candlestick confirmation, you can now enter without any issues. So currently that is what we are seeing. Do you have any questions there? You don't have?
Yes. I'm just waiting to enter that buy.
Okay. Okay. So you haven't been trading anything else this week?
I tried C3 again.
That's why you lost money.
I know V75 is the one that made me to lose.
So C3 won.
V75. No, V75, not V75. V75.
So C3 won.
Yes.
Yes, you came out or you're still in?
I came out. I just take like 2 spikes.
All right. Okay. So your analysis you're still doing over the phone.
Yes.
Okay. So on the 30-minute, on the 30-minute on the 30-minute time frame already, you can see that the downward channel has been broken. Yes, it was broken here. So now this area that we marked it based on the 1 hour. So now this breakout, if ever price comes back here, rejects here, we're going to be much more happy to take the opportunity there. Because remember, whenever we are going either bullish or bearish, the market has to give us some strong bullish chart patterns. Like, so right now, the bullish patterns that we currently look out for is either we get the common double bottom, inverted head and shoulder, triple bottom, and so these are the common patterns that we are currently looking for before price just decides to boom up. So here already the breakout is good, but now we need to identify any pattern that can happen. Is it going to reject here, then go here, then come back down? Then, because if it does like this, now it's an inverted head and shoulder, left shoulder, head, like this. If it does like this, it will be like this. So meaning the first buying opportunities will be there, second ones after the break there. That is if it does like that. That is if it does like that. So now we need to see the response of price now, where it is going right now. We now need to identify the response of price. So already let me see our entry moving average. So the 20 moving average, it's also our entry moving average. It also guides us for entries. It also guides us for entry points. For example, if you check, ever since price started going down, price was failing to break this, like this opportunity. We started, we gave the sell signal here. So if you check here, price failed, same as here, failed, here failed, here failed, here failed, here failed, here failed as well. Then here tried to buy a little, but it bought a little, but then came back down. This was, I think, around yesterday. Same as here, same as here. So now, broke, retest. So now the moving average is fully below now, meaning the buying opportunities now, they are mostly presenting themselves. That is what it simply means, this one, the 20 moving average. So the 20 moving average guides us, especially for entry points. Very good when it comes to guiding that. Same as the 50 exponential moving average. The 50, this is the 50 exponential moving average. When you see it going below the market like that, when you see it going below the market like that, know that definitely now there might be what? Selling opportunities. If you check ever since here, it was above. So one can even use the 50 exponential moving average to know when to come out of a swing trade. For example, this was a swing trade that started here. Swing trade that started there. So you would have used the 50 exponential moving average as well to even guide you to say, when should I come out? For example, here it came close but never broke here. So meaning you're still holding and you're still inside the swing trade. You're still inside. He did broken here. That's when you're going to say, now I'm coming out of my my swing trade. So the 50 exponential moving average as well is also good for that. So here as well failed. Then finally here now, finally broke out, and actually, so now someone who has been holding the sell from the top there, they are now saying now it's time to what? To come out now. And as they are coming out now, they are also now what? Waiting for the same buying opportunities that we are now waiting and anticipating for. So this one is good now when it comes to actually holding swing trades. You can even use it on your chart, especially when you have a problem of knowing when to come out of trades. It will guide you when it comes to that, knowing when to come out, especially of these long-term trades. When you say a trade is a long-term trade, for example, this one, this was a long-term sell. So whenever you hear people shaking, not knowing when to come out or whatever to do, just you can simply either observe where price is and where the 50 exponential moving average is. So when you see it still price still respecting it like that, you don't need to shake. It still means you're still safe. So right now, it's now below now. It's now below. So now, as it is below, it's simply confirming to this breakout of this downward channel, to say most probably now we are now going to be having what? Possible buying opportunities. Possible buying opportunities. That is what it's simply telling us now. But at the entry, we simply wait and see, wait and for the rejection. Once you get the rejection, then you enter. So now, this area, we expect a rejection there. If it doesn't reject there, maybe here, the bottom here. Why at the bottom here? Because this is also a significant level, respected here up until it broke. So this was the breakout here. So just in case it comes back here, it will also be a good entry trigger, because that can also be an inverted head and shoulder somehow, because you'll be having your left shoulder like this, your head like that, then your right shoulder like that. So it can actually also be a head and shoulder somehow. So now we simply now need to look out. Whenever we are going bullish, we expect some form of bullish chart patterns. So if you check, even before price went down all the way like this, we had some form of bearish kind of bearish chart pattern. Had first top, second top, neckline. First top, second top, neckline. After, if you don't enter here, you wait for the break of the neckline, retest, you would have entered here as well. This was a bearish, this was an M, a double top. Either you entered there or after the break and retest of the neckline. So this was a bearish chart pattern to show that most probably we're now going bearish. Same as here where we gave the signal. This was also a double top. First top, second top, your neckline here. Neckline broken, came back for a mini retest here. So either you could have entered there or here upon this retest that happened. So you actually see that whenever we're going down, we need to see some form of bearish chart patterns. Whenever we're now going up, we need to see some form of bullish chart patterns. So now we want to see that bullish chart pattern. We now need to see those bullish candlestick patterns. We now need to see all those things. We now need to see them. So as you are seeing those things, they'll simply be confirming to tell you that you are safe on the buying side of things. Because right now, we don't want a scenario whereby, because right now already we are in a range on a higher time frame. On a higher time frame, already we are in a range. So on these smaller time frames, we don't want a scenario whereby price ranges before it begins to go up, because already we're in a range already on a higher time frame. So now what we want here, simply an entry trigger, because the first initial entry that I have is here. I entered immediately after the break there. The stop loss was very tight as well. Immediately after the break, I was in. Stop loss was somewhere below that candle, somewhere here. So immediately there, I entered after this break here. So now that's the first entry. The second entry now, we now need to identify the rejection either here, or even if price comes here, we now need to identify those rejections. So that is what we're currently looking at. Once we get that bullish candle, that bullish chart pattern, it will actually be good for us. Either a bullish chart pattern or a bullish bullish candlestick confirmations, all those things, we now want to see them.
Okay.
Yes, so that is the current lookout. That is the current lookout. So here as well, if you see price breaking this level here, it might push there, then maybe come back to retest like that. This can happen. If it manages to break there, it can push further to that level, then maybe retest later if it doesn't retest now. So that can also happen. That can also happen. So you also need to look out, once you get that break on the 15-minute, you can as well enter just a minimum risk trade there, because you still want a bullish candle, bullish chart pattern to be clear. Once it's clear, that's when you can now enter reasonably. So now there, once it's broken, one can enter, then somewhere there we expect it to drop again. But if it comes and retests now, we simply need the rejection. Once we get the rejection, we can enter as well. So that is what we're currently looking at for the VIX. Up until we get the break of the range, we are still in that range on a daily time frame. We are still in the range. Up until we get the break of the range, we are still going to be following that range.
Okay.
Yes, so that is what we're currently looking at on the VIX. If you have any questions, you ask in the group there.
Okay.